Hello everyone, welcome back. In today candlestick part 3, we are going to discuss on shooting star. Shooting star, it looks like this one. Shooting star indicates a potential, the price stop and reversal. The shooting star candle is most effective when it forms after a series of 3 or 4 the consecutive rising candle such as here, and then followed by a shooting star candle and then price reversal. It may also occur during the period of overall rising price, even if a few recent candle were bearish. A shooting star open and then rise, like here you can see on the right side. Open and rise strongly during the day over here. As the day progressed though, the seller step in over at this place and price back down to the near to the open, erasing the gain of the day, and this shadows that the buyers lost their control, and at the closing the day seller may take control. Here on the shooting star candle, this is the long shadow and little or no lower wick where you can see. The important thing is to where its formation. It can form on the higher or lower. If it's form the same candle at the lower, it considered as an inverted hammer candle, which will cover on the next part. Today we are going to discuss shooting star. So let's jump on to the chart, we'll understand more. So here you can see this is the shooting star candle, but here why we are taking this candle, as always I say chart and books are different. For me, what I consider to trade for this shooting star candle, we have seen this continuous rising from here all the way, and as earlier I discussed that maybe on between that also you will see one of two candle bearish candle between that, but we need to always wait for that price rejection the first time. So this is the point, the price first was rejected, then the second attempt was made. Now here at this point, this is the first candle was rejected, which is the bearish engulfing. It not managed to cross above this and then make shooting star candle. So this is the one ideal candle which we can trade. So here how you can trade, you need to just simple, we need to wait for the confirmation that on the next candle when it breaks to the shooting star candle's low, we can enter. Ideal target is to 1:1, and then after you can trail your stop loss with the 50% of your costing price, and then you can hold for the target of 1:2. But this is generally we use always for a scalping if you are doing intraday for the smaller time period. If you are using a longer time period, then you can consider for the next support. So if you see over here, your next support will be here, so your target, you can consider this price to your book profit. So this is how you need to trade. And the other example, if we see over here, this is the second example. Price was rising here, fall, again attempt. This is the trend line coming down from here, rejection. Second candle inside bar, and third candle is the shooting star candle. This third candle is same as the previous high. So here also we can trade. Once the low break, we can enter 1:1 profit book, exit. This is the another example for the best 1:2 in this one you can get the profit. The things where we should not enter is this place, because as you can see the price is falling down and then is consolidation over here between this higher and low. So we should avoid this inside bar shooting star candle over here, even though the price was from here falling down. But for me, this one I will consider better to be outside bar, or else bearish engulfing, rather than I will consider as a shooting star candle. Shooting star candle most of the time we have seen top of the trend, then only it's ideal to short for that. So friends, I hope you like this explanation for today's video, and be in this channel for the next upcoming videos. Thank you. Take care. Bye bye.